Okay, so very good afternoon, everyone. It's Charles here with Frgnt Daily Chart Analysis. As I mentioned, nothing too strenuous whatsoever. Just going over some charts, easy charting on a Sunday afternoon, just to see how potentially we could fare as the markets begin to open. So the first pair that I always look to go through, as always, as Boris and Sai will know as well from FRGNT Mastery, is the DXY. And I've left my charts unchanged just for some transparency, as well as just to really paint the picture that sometimes it is okay to be wrong, and sometimes we will be wrong. In fact, am I sharing my screen? No, I'm not. My mistake. All right, here we go. So I hope you guys can see the DXY chart. And as I say, I've just left it untouched from Friday markups, as I said, just to see that, you can mark your charts at the highest degree, highest level of professionalism. But if price action simply doesn't want to play ball with your strategy, it is what it is. So as you can see, this higher time frame order block that was gained from that weekly time frame. I could not anticipate that this would happen. It's a weekly order block. More often than not, weekly order blocks carry a high degree of weight behind them. And when you see a weekly candle closure with such intensity, pushing all the way through a weekly order block, you have to ask yourself the question, well, is it me that's just wrong, or has something else in the market occurred that we were simply unaware of? And now, if you look on that weekly chart, the bottom right-hand chart, you can see how more often than not, let's look at the top here, a weekly order block was created, although it was tapped into once and twice. Look at the reaction that we had from that weekly order block. So one would expect more of the same in terms of the opposite direction. If I zoom that chart for you, that with this weekly order block here that was highlighted, although it was tapped into once, I expected, in all honesty, for price to find some areas of rejection within that weekly order block and at least allow the DXY to push bullish ever so slightly. You can see here on the first attempt of that price action coming into the weekly order block that it did just that. There was a reaction from there and price pushed up. However, it pushed up into a 4 hour and the daily 50 MA. So with that said, you can see via my previous chart analysis that I then expected price to come back down, potentially find a little bit of more reaction up towards those EMAs before potentially a continuation short. So absolutely, it isn't abnormal for price to have made a lower low, but what I would have expected is at least more of a reaction from that higher time frame weekly order block in line with smart money concepts. So that's sort of the general overview, just to say that, one, if you do mark your DXY chart, as I do for good example, and the main pairs that I trade are for good example, GU, EU, AU, even speculate and have a look at UJ from time to time. Any cross pair that has that dollar inside it will, of course, also feel the same force. Now, I was quite happy on Friday to see that all pairs had aligned, and with a rejection from this area that I was forecasting, I was then looking for short positions, for example, on GU, on EU, and also on AU. So again, if I'm wrong on the DXY or the DXY doesn't follow suit, then absolutely all my other pairs will fail also in the analysis. However, what we always preach about, especially in Frgnt Mastery, is that don't jump into trades simply as they come into an order block. For example, here, if you were to look to trade the DXY based on smart money concepts, based on the way that I trade, then this would have been a potential position if you play the game with me. However, the reason or how we look to safeguard against that is waiting for breaks of structure on, for good example, a 15-minute time frame. When you do wait for that break of structure, again, I know it's the DXY, but it's the same on all pairs. So if we bring ourselves to this position on that 15-minute, then of course we had this 15-minute order block where it had an area in the market on the 15 based on that wick where price was failing to break above. So waiting for a significant break of structure, for a good example, would be a push above an area that price was failing to break above, then pull back into a point of interest, a point of imbalance left behind as a result of the break, and then we'd be looking to take a short from that position. So in order to give yourself that certainty that price is, of course, ready to turn around in line with current price action, the fact that it was very bearish, the best you could potentially wait for is a 15-minute break of structure and then wait for price to return to the imbalance for a long. So as I said, that would be a safeguard. The fact that that never happened, of course, then allowed me to not take so many trades, for good example, on the cross pairs because I also didn't get those breaks of structure on those pairs also. So when the DXY is melting or it's parabolic, then more than likely on the cross pairs, we're not going to have that break of structure and pullback either. Price is simply just going to continue in its direction. So that's enough talking from me. What I'll do is just mark this chart up as I would ordinarily, and then anyone watching it back, or for good example, Boris in the chat, then he's able to see and compare his analysis against mine, and so will you guys watching it back. So I'll be brief. I won't take too much of your time in terms of commentary, but it's very clear that this order block has been mitigated, so we simply get rid of it. On the 4 hour, nothing there that we could simply reuse as price has just dumped all the way through that. And I just start to get rid of my drawings and amend my EMAs on the particular time frame. So this is the 4 hour time frame to the left. I will indeed put that order block back there, just in case price would look to return back up to it come week open. And of course, this 4 hour order block is now null and void as well. What we can see on the DXY, just on that 4 hour time frame, is that price has broken below that 4 hour 50 EMA, come back into the 4 hour 50 EMA, and then price has respected the EMA as we expect it to do so. So ordinarily, as we look at price making lower low, lower high, and extreme lower low, we are now overextended in my opinion, and we could see a rally in the US dollar come week open. That would not be unnatural to see in line with basic price action without looking to the left where it could react from. Simple lower low, lower high. We ask ourselves the question, where could that lower high be towards? And you can see, well, where is price action always looking to come up to? And that would be that 4 hour 50 EMA. So in line with the 4 hour 50 EMA, we do have indeed this 4 hour order block, which has been there, I guess, from the majority of the from Thursday, and then there was absolutely no real pullback. So we'll put that on there for now. What we'll also do is pop back to the weekly chart on the on the right hand side, excuse me, just to see where price is looking to gravitate towards. We've got that wick imbalance. So that's the first thing that I'm able to see. And then what I'll do is clone that and place it at that extreme low as well for the wicks. The reason why I'm doing this is that there is just no order blocks that I can look to manipulate as easy as it was up here. And what's also nice to see is how that weekly 50 MA is performing in line with price action as well. Price came in, weekly 50 MA tapped. Fortunately, price didn't come back up to this point of interest within that weekly 50 EMA, weekly order block, 4 hour refine for that rejection short. But nevertheless, we still are expecting as a result of this one candle. So this is how even in FRGNT Mastery, we were discussing, for good example, perhaps there has been some news release that we're just simply unaware of, i.e. hasn't been illustrated on any of the news platforms. I've got two funded accounts that I trade only over the last couple of months, to be quite honest. So I stopped trading funded capital, but on those platforms, there was no restriction that I can remember on a Friday. So this incredible move here has engulfed, well, as you can see, all previous weeks price action quite considerably. I mean, even this weekly candle here, price has absolutely tanked in comparison with the range. So most certainly, we know the US dollar is king with our analysis, and it's just one of those that we have to market using our strategy. More often than not, it will actually hold. I mean, I can say 75% at least of the time. I know that my strategy has a good hit rate. So this is just one of those 25% times for good example that price simply doesn't respect any levels. So back to the analysis. Wick imbalance is really sort of the best I can look to do. If I were to highlight this order block here, it would be a little bit clutching at straws, only because price or yeah, we can see that price has definitely closed below that order block. Don't want to start over confusing the chart, so we'll leave that with a wick imbalance. We'll see where these wick imbalances align on those lower time frames. Perhaps there's daily order blocks in and around those areas. Perhaps there is structure to be aligning with as well. So let's put that on all intervals. Put this lower one on all intervals as well. And then we can see on the daily time frame where that fares. So top right hand corner now, daily time frame. So we can see those wick imbalances and just look at that for perfection. We have let me just make that bigger, it's much better. We have from that wick imbalance a clear daily order block. So that is telling me from that higher time frame that potentially I should start looking here for where price is looking to react from. So we've got that wick imbalance. Then see there that daily order block, right? Price has come into it and just stopped dead. So if price is just stopping in the middle of nowhere, we have to ask ourselves, well, why has price decided to stop there? What is there? So we've gone from the wick imbalance, daily order block. We'll show that on all intervals, and then we can look to manipulate this area to see if we can find a 4 hour, for good example, a 15 minute, and then we can look to restart that analysis on the DXY. As I say, the DXY, why? Well, because our cross pairs, if we can find turning points of that DXY, then we can align and look for alignment, I should say, across our cross pairs, turning points around those as well. Once there's the alignment, then we've got a very easy way of gaining confluence by using an additional chart. So that's what we're looking to do. Again, that wick imbalance on that weekly time frame, we can see exactly how that was created by this tremendous bullish candle here created on that daily time frame. What I will still do is just for illustrative purposes, I'll still highlight it, but what we do know is that there's more than likely going to be a lower time frame order block in the lows of those areas. Well, that's what we hope, either towards the equilibrium in the center of the in the midpoint of the higher time frame order block, or even better, to be honest, towards the lows. That will then give us the best possible opportunity to long from the lows, giving us the best risk to reward ratio in order for us to go break even. So very simple, very repetitive type of trading style that I have. So we'll get rid of that for now. We have our daily order blocks on the chart, and then just for me to, in fact, don't want to do that. Just for me to, okay, it's not going to play ball. For me to move my daily 50 EMA and understand what's going on. Again, I do not pay any attention to price action on the daily time frame. I mean structure, that is. I don't pay any attention to structure on the daily time frame either. However, if it's incredibly clear, then of course I will take it into consideration. But what I can see, for good example, is just a simple line across these highs. Or if I go with candle body closure, we can kind of just look to understand why here in general is a nice area that price could look to reject from. Why? Well, of course, price was making lower lows. For a good example, price then popped up, made a high, came back down to find some liquidity for whatever reason. But the most important part is that price made a high from that area, engulfing the most recent high. So it's very simple. As I say, I don't pay too much attention at all to price action, but if it's glaringly obvious, then absolutely we take it into consideration. And then it just builds here as a high confluence area. As you guys always ask, why do you select these particular points? Well, wick imbalance on weekly nicely aligns on the daily time frame, and then we can see on the daily that this area does mean something because it made a high from that area. So indeed, we're going to highlight it. So not sure if I've done it already, but all intervals. Apologies for the noise, guys. Milan can get a little bit noisy, especially on a boring Sunday. All intervals, and then head down to my most meaningful time frame, which is that 4 hour. Here is where I start to, as you guys know, take into consideration structure as well as all of the additional bits and bobs that we always talk about. So again, performance of that 4 hour 50 MA, it is now being respected in line with short price action. So what we'll have to do is take a little bit of a zoom backwards on that 4 hour time frame, and let's just see, can we refine down that daily order block? And indeed we can. At the lows, as we spoke about, the best place for it to be, and there you are. There is a 4 hour order block. So what I'll do, make it incredibly bigger, i.e. stretch it across the chart. I'll ensure that this then appears on all intervals. And let's bring ourselves back to relevant price action to see how we're faring. So zooming out again, here on that daily time frame, you can see is the reason why price then broke above the highs here on the left. Glaringly obvious that here does lie some liquidity because look at the power that came in from this area just there. Now, again, it's not set in stone. It's a Sunday. Anything can happen come come market open, i.e. a tremendous gap down, and all of this is absolutely pointless. However, it's a good basis to start. So what we can see there, we've got that 4 hour order block, and then ordinarily we'll be looking for price to come into that area on the lower time frames, give us not the break below like so, but give us some rejection, and then we'll get the same on GU, for example, EU and AU, but in the opposite direction. And then as we are seeing dollar strength start to come into the market, we will then see that weakness play across in terms of the cross pairs, i.e. GU, EU, and AU, for good example. And then UJ on the opposite direction, then we can see this scenario playing out on UJ as that will look to correlate with the dollar index in a bullish fashion. All right, so that's good to bear in mind. So now we'll have a look at that lower order block as well to see, well, if our analysis is not correct here, is there another opportunity in line with the wick imbalance from the weekly time frame, in line with the daily order block again from that daily time frame? We're looking to refine that area down. Here is that area. Now, can I find a 4 hour order block in the round? So again, here is that wick imbalance. We can see it overly created from that 4 hour time frame. And in terms of 4 hour order blocks, do we have any? So nothing here. As a result of this wick, it's left us with nothing to play with from the left as it's engulfed all previous candles. We'll move up. No 4 hour order blocks, no 4 hour order blocks. The only 4 hour order block that we do have is this one. And with that said, then, as you can see, it is very close to the current 4 hour order block. So that's not an ideal scenario whatsoever. As we said previously, we much prefer that order block to be down the lows. Now, it doesn't mean that we don't use it, but what it does mean is that, well, the DXY has two significant areas, and those areas are very large where it could turn around from. So again, what that means, for good example, on GU, let's just play the game. I don't know what GU looks like at the minute, but let's say for GU, we have an order block up at the highs that we're looking to short from. Now, what we can imagine is that GU is now coming up towards that 4 hour order block, just as the DXY is coming down towards that 4 hour order block up at the lows. Now, what's important for us to see, now I'm drawing the lower time frame, is that we have those significant breaks of structure coming from that level. And with that said, just to emphasize what I talk about so it sticks if you're looking to listen to it. Again, how do we get the security that price is going to want to reject from this 4 hour order block, not this one below? Again, on the lower time frame, as price starts to come in, we want some significant breaks of structure from that area. We know we do not always need to be the first in the market, and we can let price move on without us. So that's what I'd be looking for on the lower time frame, for good example, on the DXY, before knowing that I'm ready to short GU or EU or AU, for good example. And then that's also going to help me on those pairs to say, well, potentially I'm not ready because I haven't had that guarantee just yet on the DXY. And as you guys saw, the DXY previously, we had some order blocks in and around this area on Friday. We did have a reaction from it, but on Friday, we didn't get too much in terms of anything of difference. So what I mean by that is if you simply put a line across like so, we can see very clearly that price on the lower time frame was in a range. So what I'd be inclined to look for if I was to be trading this now, for good example, something different. Can I see a bullish candle closure from that area engulfing all of those candles? If I can find that, then of course I know that there should then be a lower time frame order block available at those lows. If I put that on for some good illustration, like so. Once this candle has now closed bullish, ordinarily we'll then be looking for a retracement back into that order block before continuation. And what that looks like is exactly as we've drawn previously on the lower time frames. As that bullish candle here closed 4 hour bullish, we've broken structure in terms of this area, like so. And then we'd look for the retracement as I've drawn, and we'd be looking for the long position, like so. So again, that's how to gain the security and the confidence, or rather the confidence to then allow you to trade with confidence. And that's always what we're looking to do. So I'm not going to go in any more depth in terms of the 4 hour time frame just now, but this is exactly what I'd be looking to find on a 15-minute time frame on the DXY, for good example, as I've mentioned. And then in the inverse, I'd be looking to find that on my cross pairs that I'm trading too. So that's a DXY, and what we'll do, we'll open those charts back up to really see basically the analysis that we've conducted and how that will then prepare us nicely. Just a simple analysis, that's how that can then prepare you nicely for the week ahead. So let's pop that there as well. In fact, no, there's no reason to put that there. That was not there. We've got an area at the top. We've got an area at the lows. And then that, the good news is that provides us with a very healthy trading range. So what we can say is that, well, if the DXY is going to look to reverse or pull back, here is a great area for price to look to go towards. Now, I put an order, or I didn't put an order block there, it was in the opposite direction. But what we can do is even just put that 4 hour order block in there and do touch top up analysis to support the reason why did I think that there should be a 4 hour order block here. So do top down analysis in the inverse. So what I can see now on the weekly, not a lot to be quite honest, but let's see on the daily where that lies. And then what we can see is, where are we? It's just simple previous daily highs as confluence, previous daily high. What else is in that area? That imbalance has already been filled as a result of that daily candle. What I mean by imbalance is this would have been a daily order block here, but it's now been tapped like so. I'm not going to clog the chart, but that's what I mean by the daily imbalance. So just simply put a line, and then as you can see, that is then guiding us in that 4 hour time frame, previous daily highs. We've got the imbalance that was filled here. So again, price has made a lower low, so it has every opportunity to make a lower high, and it's our sort of chart analysis that we have to figure out, well, where is it going to make that lower high potential lower low from? here's a nice area, and also here is a nice area. So with that said, we still have a beautiful trading range from the lows down to the highs that the DXY could potentially look to reject from. And that's as simple as that, guys, for the DXY. Then, as I say, ordinarily you look to refine those areas down, lower time frame break of structure, and then off we go. All right, so let's go for EG. Let's do things out of order. Cool. So I actually closed my EG trade out around here on Friday, just before finishing off. Where was it? What's the time? Definitely wouldn't have left it that late. But nevertheless, we were up here somewhere, roughly a 1 hour return, so nothing really to scream and shout about by any means. So again, let's start from the top up and see, or rather top down, and see how we fare. So where are we? Weekly time frame. So let's get rid of all of these bits and bobs that I can see and let's play the game. So, weekly time frame, weekly 50 MA, great place to start. You can see that there are no higher time frame order blocks around to the left that I can look to start printing across like so. Play the game, nothing like that's available. So, I'm stuck currently with potential wick imbalances, which I don't mind highlighting whatsoever. And to be fair, this is not going to be a chart that I'm going to have to do too much about on the lows as a result of price just about coming into that area. Nevertheless, we've got a wick imbalance from the daily. Let's call it exactly what it is. Daily wick imbalance. Oh, excuse me, that's weekly time frame, isn't it? Cool, we'll just say W imbalance. Cool. That's there. Then we've got previous weekly lows that I'm just going to move up now. And then better adding to the party is now this wick imbalance, right in that equilibrium of the daily order block that we can see is there. So wick imbalance again. So we will now highlight those areas on all intervals. Let's make it make sense on those lower time frames and see where we go from there. To be honest, guys, this is how my chart usually is. More often than not, I don't have to do too much work to them over the weekend because they're already set from the week prior, unless we see crazy price action such as, excuse me, the DXY, or even I know from memory, AU absolutely tanked. There's not too much to do, but EG that is not crossed with the DXY, and again, it's why it's always nice to have a variety of pairs. So, for example, have GU, EU, and AU. I'll also look at EG for good example. And what else do I have here? GCAD, it's not a cross pair, but the majority are pretty much reliant on that DXY. So that's why the DXY for me is always up at the highs. So anyway, back on track. EG, what do we have? So we've got the wick imbalance. If we show them across all intervals, so that's for the lows. Weekly 50 MA is there. We can see that price action is now coming to retest that weekly 50 MA. Good news. So what we're going to expect is price to come down into it, lower time frame break of structure before rejection long. So hopefully EG, just by looking at where price has stopped nicely into that daily order block, hopefully it's going to trickle down through these order blocks. We'll look for, as I said, that lower time frame break of structure before going long. But let's see where we can look to do that. Far too many alerts. Instead of deleting them, just drag them away because they'll be annoying as I hover over them. Cool. So in the flip side, I don't just look at where price is now. I look at where can price, if price does get up at the highs, and prepare myself in both scenarios, highs and lows. So again, what's easy for me to do is simply clone this now and move that up to those highs, wick imbalances. And again, you can already see where that aligns, but we'll take a look and find it below. So daily time frame. Much like the DXY, complete repetition, rinse and repeat all the time, we can see that there is a daily order block coming from the left that created a high in the market. We've moved it across, superimposed it, and we can see that price is failing to break below it. We've got quite a tight trading range here, as a result of a daily order block here as well. So we'll start from the lows and we'll build that picture up. So again, I'm not really concerned about structure, but what I am concerned about is how the 50 EMA is being respected on the time frame. So we can see that price here had been printing and closing above is the word I'm looking for. And then look at the rejection. Every single time price came into that daily 50 EMA, off it went, came down, off it went. And as soon as you get that break below and close below, we can now look to expect the inverse. So look at that. If you're just trading basic order blocks, price broke below, left the daily order block up at the highs, price came in, wick, 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 roll over. And again, so price has now made a lower low, lower high, lower low. Now price into that lower high territory. Unfortunately, actually, I think I may have taken a EG short towards the beginning of the week, in all fairness, as a result of looking for that rejection. Um, as you can see, lower low, lower high. It's just the perfect place. Daily 50 EMA rejection. So it's a really great example, EG, on just how the 50 EMAs, once you understand them, look how powerful they can be. Now, it's not that you can look for immediate rejection from those EMAs, but it's important to understand that even when, I mean, it's quite incredible, even when price on that daily time frame was all the way up here, you have to have the faith that within the hours remaining of that daily candle, I expect price to close below that daily 50 MA. And look what happened. It found the liquidity right up at those highs, looked to the left, wick imbalance filled to absolute perfection, and then look how it closed. Boom. It's just incredible. Once you understand those EMAs, the order blocks behind, it's a very, very, very powerful concept that I urge you guys all to do your due diligence and take a look into. So again, enough of me rambling on. What can we expect? Well, we have made that lower low, we have made that lower high, but why I'm happy and now potentially looking for almost immediate rejection is that price had failed to make a lower low. Now, if price, like on the DXY, had made a lower low, then I'd be saying, okay, I'm happy to trade the lower high in anticipation for a lower low continuation. But the difference is here, we haven't made a lower low. So I'm now knowing, or in the back of my mind thinking, well, potentially I could be, not that I always wish to aspire to be in the first position, but I could be the first in the position for a potential rollover to the upside as a result of no lower low created. And you have to ask yourself, if price was going to create a lower low, well, why hasn't it? And the reason why it hasn't is because it's just stopped dead in and around these areas, found some resistance, and it's just stopped right there. Cool. So what we're going to be looking for. So up at these highs, daily order blocks, daily 50 MA. So it's safe to say that this order block to the left has most certainly done its job. Now, what I'm going to be doing, it's incredibly big, but just for illustrative purposes, I should say, here lies a tremendously large daily order block. Now, again, we know that the best possible shorts or positions rather is going to be coming from the absolute highs in terms of a short and from the lows in terms of a long. So having that daily order block on the chart, it's nothing but a guide to say, okay, I am now, let's say prices in this area. It's for me to say, well, I am now in higher time frame territory, meaning that I'm not going to be taking long positions, even if price is printing bullish on the lower time frames. I know that I am only going to be looking for consistent breaks of structure, pull back, find the confluence, and then short from that area. So that's only a guide to tell me where I am with price action. In the inverse, there is no daily order blocks to the left that I can look to use other than continue to have this daily order block on the chart that has done its job so far. And then what I need to do is see if there are any other order blocks that I can look to refine underneath. So 4 hour. And again, this is my favorite time frame as in regards to structure that I pay attention to price action as well as the EMA performance. So Let's get rid of that for now. We know the 4-hour 50 EMA is now there. So here's a grand example now of understanding targets. So I know if I am to get into, excuse me, a long position from those lows, I need to understand where my targets are always. It's important, very, very important to know when to get out the market or when to manage your position. And here for me, it's always been, or of late, I'd say the last 2 quarters, I was really looking to stretch my targets, or sometimes not, just based on where the EMAs are. So the closest EMA that is acting against your bias. And for me now, what I can see, just to help you build the picture, on the left-hand side, we can see that price broke below, if there's anything better over here. Okay, great. So price was trending below that 4-hour 50 minute. Look at the rejection. Price came up, rejected it. Again, pay really close attention that at some point this candle was all the way up there. However, within a 4-hour period, price came all the way back down and closed under the 4-hour 50 EMA. Very important to keep that in mind. So more relevant price action now. Look, price broke below, closed below. Again, as I said previously on the previous pair, if you were just to take a simple order block there, lower low, lower high, and look at the short opportunity. If you're trading higher time frame positions, simply like that on a 4-hour order block, price came in. So price then started to move away, or look at the performance of the 4-hour 50 EMA in line with price action. It's rejecting it, it's respecting it, wicks above, close below. Important. So what can we see now? As I said, although price in this area on, let's say, the daily made a lower low, we can see that price failed to make a lower high. Now, excuse me, a lower low from this area, tempting me into believe that price is potentially ready to turn around now. The question I have to ask myself is, where am I getting that evidence from? Can I build more of a theory to come to that conclusion? Well, what I can see here, for good example, is that, let's say, price was failing to break this area. So price didn't make any lower lows, but price certainly looked to at some point made a lower high, right? Failure to make a lower low, which actually means that this area could have well start to have been a higher high. Now we're in the territory of finding a higher low. Now, potentially for the start of the week, we could be looking for a higher high continuation. Now, regardless of what I believe, I have to take the facts. So I do know that if I am going to take a long position, unfortunately, regardless of what I believe, I have to manage my position by that 4-hour 50 EMA. Why do I have to do it? Well, just look at the performance. Every time almost we have to have a thought process. It's not every time, or sometimes it can crash through it, and I should hold the position. I have to be very strict with myself and say, right, well, if I get good risk to reward ratio by that 4-hour 50 I may want to close the position out fully. I may want to just manage it to go break even. I may want to close 75% of it. However, what I do know is that as a result of this break pullback failure to make a lower low, is that I do honestly foresee potential long movement like that back up to these areas that are still yet to be mitigated. All right, so that's my thought process. 4-hour time frame down at the lows. Now let's have a look at the 4 hours up at the highs. So again, we're starting to build reasoning why we should be putting order blocks where they are. Now, I do see a very clear order block here. That's tremendously obvious, but I have to ask myself, do I have any evidence to put an order block there? Because potentially I could just be putting order blocks here, there, and everywhere on a chart, and then looking to short from here, there, and everywhere. Like I say, from the left, look to the right, be shorting from there, just without any thought process whatsoever. Where's another good example? I hope you get the drift. You don't just put order blocks into the chart. You have to have a good reason to put it there. So let's have a look on the day. Let's go top up to see where that order block lies. And does it really make sense to put it there, or should I just get rid of it? So this is the questions that I'm really asking myself on on a daily basis when I'm putting order blocks on the chart. I have to say, well, does it make sense to put an order block here? So what do we have? We have previous daily highs. Let me just bring that down there and we'll put that or ensure that is on all intervals, previous daily highs. Let's go to the weekly even. Is there anything on the weekly time frame around the previous daily highs that we've just put in? Any reasoning at all why I should be looking in that area? So we got previous daily highs. No, there's nothing there. So I know my analysis then on that 4 hour order block starts from the daily. Cool. And I'm going back over things, but I hope you guys are able to gain something out of it. So daily is where I start that top-down analysis. Previous daily high. From that previous daily high, we're looking to find, can it guide me to select an order block in and around the area? Of course, now we can see that there is a 4 hour order block. So what that will look like, for good example, if you pay careful attention to those daily, 4 hour candles, if the 4 hour comes up into this area, don't be surprised if we wick above and then within that 4 hour, we will close. Let me draw it bigger for you guys. That's a 4 hour candle. Although we may wick up, I'm expecting it to be respected and close below. Why? Just look here. Or rather look here. We wick down below and then we close above. Again here, we wicked up, close below. We wicked up, close below. So 4 hour order block, wicked up potentially, closed below. Okay, so we've used the 4 hour 50 MA to explain how we can also gain rejection from an order block. Exactly the same. Even if price goes into your order block and passes it on the time frame, as long as on that particular time frame you do not close above, you will still be looking to use it. Just to expand on that, if this 4 hour candle then closed above that 4 hour order block, guess what I would do? I would simply get rid of it and understand that that order block was not respected. However, if price does something like this and gives me a wick up to those highs, then I'm very happy to see that because I know what that will mean is at the top of those wicks, wick imbalances, wicks get filled. I would look to anticipate that there will indeed be a lower time frame base that I could look as a result of this now creating lower time frame breaks of structure, pullback, simple trading. All right, so that's the bias that you have to have. Start building up all these different scenarios in your head. What could happen, how it can happen, and how you're going to be looking to execute that trade. And once you have a very fixed and rigid plan, I mean, as I say, the possibilities are just endless for you in trading. As long as you have a fixed plan that you can always refer to, and you're not talking rubbish and you're not sort of adding in bits and bobs or doing things just because you feel like doing it, fixed plan is exactly how you will gain profits in this game, in my opinion. Right, so that's a long way of saying I validate this area. Previous daily high, 4 hour order block. Now, let's go. Is there any need? Yeah, why not? Let's go to the 15 minute to see how price is printing. So all intervals, we want all intervals and up at the highs. I'm pretty sure it's already there. Okay, so bear in mind what we said, guys, just to keep us in. Here was a lower low on the daily, lower high potentially. Failed to make a lower low. However, on the 4 hour, we had lower low. Then we did not have a low from this area or from this area, but what we had was a clean break of structure, also breaking the 4 hour 50 MA. Now we return. So what we are all looking to expect is potential high, right? Keep that in mind as we then start to go down through the time frame. Very important. Always know what to think about. Right. Okay. EG. I'm pretty sure I took a loss on EG at some point in the week as well. Sorry guys, just reading something. Okay, cool. Again, if an order block isn't respected come new week, you get rid of it. What's perfect to see is a 15-minute order block already there. So the foundation is already set. That's what we like to see. Cool, cool, and cool. Just cleaning up the charts and putting things where they need to go. Brilliant. Okay, so here is that 4 hour order block that we were speaking about. Let's see if there's anything lower because I can see this is a very large daily order block. I can see that with that white line. Anything there? No. So let me show you guys what I'm viewing. This area here already mitigated, so just going to leave it alone. Anything further to the left, don't usually start scrolling, because when I have to do this, I now know that I should really be waiting for a base to build. So nevertheless, it's a 4 hour order block. This 15 is very much so available. Now again, is it for me to jump in a trade first thing Monday morning? First thing I'm asking myself, well, is there any need? What's the range? Okay, from area to area, we're looking at around 40 pips. That's telling me don't need to be the first in the market, but what that's also telling me is that, okay, I am happy to take an aggressive position on the basis that structure point, structure point. So you always have to ask yourself this question, what kind of trader am I going to be? Am I going to be a trader that will class that as a break of structure, pull back into imbalance, look for the long? Or am I going to be a trader that is going to wait for this break of structure, pull back into the imbalance and wait for long? That's completely up to you. As long as you have the statistics to base or to give yourself the confidence to take a trade in any direction, then you go for it. But I know personally for me, I'm happy to come to the charts if I see either or, then I'll look to take it. And the reason why we then start to analyze price action. So what we can see is that price was, let's say, we made a low in the market, lower high, not quite a lower low, lower low, lower high, and that is confirmed as a result of this lower low and then lower high. So on the 15, still anticipating a potential lower low. So the way that I'm going to safeguard myself against jumping into a trade that could just be on its way to making a lower low, in your head as you're listening back or if you're hearing this live, what am I going to be waiting for? Well, something different. Break structure, please. So now I'm no longer in territory of making a lower low. Here should have been the area that should have caused a a lower low. We didn't get that. We had an equal low or a tap into 15-minute order block, a break of structure, pull back into imbalance left behind, and then it's again very, very simple trading. So that's what I'm going to be looking for come Monday morning. Break of this structure, pull back, which will then leave me again with, it should leave me, I should say, with a solid 15-minute order block down on this. Where are we? 15-minute order block, just so I don't confuse you guys with the colors. Why is it doing that? Perfect. Once I've had the break on that 15-minute time frame, I should then be able to identify a new 15-minute order block. I mean, sorry guys, you had to hear that awful car. 15-minute order block as a result of the break of structure, pull back into that imbalance, and then take the long. So as I hope you can see, it's very repetitive, very fixed. I leave very little to think about other than does it make sense? Does it fit my entry criteria? So previous daily high, let's go over something new before I let you guys go. Again, very nice. I can see it already. So we've come to the conclusion that we're happy to use that 4 hour order block. We went up the time frame and we asked ourselves, does it make sense for you to put this 4 hour order block in the chart? Have a look. Previous daily high, 4 hour order block, and look at this. We love to see it. 15-minute order block refined. Perfect. So that's good enough for me. Also, does it make sense to be looking to take a short from there? Well, although it's not gleamingly obvious that here is a potential lower high position as a result of, let's say, I mean, it's difficult to reprice action. When it's not clear, i.e., when this area is not clear, it's very clear just to say, well, actually, a place in the market simply cause price to do that, right? So if price then returns back to that area, I'm expecting it to at least do that, if not that, right? However, what we do know is that price is more than likely going to look for a higher high from that position. However, We know we've got 4 out of 50 EMAs to start contended with. We know we have previous daily highs, daily 50 EMAs. That price is definitely going to look to reject from as well. So with that said, definitely not going to hold the position blindly. Have to do something by that 4 out of 50 EMA because we can look that there is potential rejection coming from it. And then if it's not to be, then again, here is a very nice looking position where you could gain a rejection from. Very clear to say, or to see rather. So what I like is daily 50 MA to start coming down as price is going to take its time to get there. Daily 50 MA will start coming down as price rise. Daily 50 MA is going to be right there. We'll tap into the daily 50 MA, hopefully in one 15-minute candle. Taps in, breaches above, 15-minute candle closes bearish from that area. We'll then be left with what that 15-minute candle will look like is a lower time frame breaks of structure on 1 minute and 5 minute. Let's draw it to make it equal. That's then going to leave us beautifully with a 50-minute order block up at the highs, pull back into imbalance. It's just bread and butter, guys. As simple as that. All right, team. Well, thank you very much, everyone, for joining me on your Sunday. As I said, I wasn't going to keep everyone here all evening long. I appreciate you guys for taking your efforts to hear me talk about charts. I'll be posting all further analysis throughout the rest of the evening and tomorrow morning, as I always do. So good luck in your trading journey. Good luck tomorrow. Boris, I shall speak to you tomorrow at some point as well. I don't believe that we have a live call. However, I'll definitely be in the charts posting my analysis specifically for FRGNT Mastery. And to everyone else that is not part of FRGNT Mastery, please feel free to check out the website www.frgntforex.com where you could look to join FRGNT Mastery. Before I disappear, let's have a look. We've got one question in the chat coming in now. Thanks for the analysis. Victor, you're very, very welcome. Give me a message if you are interested in joining FRGNT Mastery. If not, feel free to take grand advantage of everything that I provide for free. So just a snippet of what we talk about every or the majority of mornings in FRGNT Mastery. Okay, thanks for joining me, everyone. All the very best, and you shall hear from me soon. Take care.